right, so let's jump right into it. It's October 2024, and you know what that means. The IRS has given us a little preview of the 2025 tax changes.
Right.
I know. Taxes aren't exactly the most exciting thing to talk about. But hidden in all these updates, there are some pretty interesting things that could affect your wallet when you file in 2026. So we're going to get rid of all the jargon and explain it all to you.
Exactly. We want to help you understand what's changing, why it matters, and what you might want to start thinking about as you plan for the future. Because let's be real, knowing a little bit about taxes can go a long way.
Okay, so first, we have the standard deduction. For single filers and married couples filing separately, it's going up to $15,000. And if you're married filing jointly, you'll see it go up to $30,000. And for heads of households, it's increasing to $22,500.
Yeah, you might be thinking, those aren't really big changes, and you're right. But they're actually right in line with inflation. It's the IRS trying to keep up with, the rising cost of everything.
Right. So maybe you can't afford that dream vacation just yet. But hey, every little bit helps, right? Speaking of helping your wallet, let's talk about marginal tax rates and brackets. The good news is the rates themselves aren't changing.
However, the income brackets are shifting. And this is where it gets interesting. Some people might actually be in a lower tax bracket now, which could mean paying less in taxes overall. So, for example, the highest bracket is still 37%, but it now starts at a higher income level, above $626,350 for single filers and $751,600 for married couples filing jointly. And of course, all the other brackets have adjusted too.
Now, this next part is super important for those of you with higher incomes. We're talking about the alternative minimum tax, or AMT. Think of it kind of like a safety net for the tax system. It's meant to make sure that even if you have lots of deductions, you'll still pay a minimum amount of tax. And the good news is that the exemption for this tax is going up.
Yeah. For unmarried individuals, the new exemption is $88,100. And for married couples filing jointly, it's going up to $137,000. So if you've been close to that AMT limit before, this increase might mean you don't have to worry about it anymore.
If your income is going up and you're getting close to those exemption amounts, you should start thinking about how the AMT might affect you in 2025.
Yeah, it's definitely a good idea to talk to a financial advisor to make sure you're prepared.
Okay, let's switch gears a little and talk about something that could give you some money back. The Earned Income Tax Credit, or EITC. This credit is for people with lower incomes, and it's getting a boost. The exact amount you get back will depend on your income and how big your family is. But you should definitely check the IRS guidelines to see if you qualify.
Yeah, this EITC expansion is a big deal. It's really going to help those working families who are having a hard time financially, and it could make a real difference in their lives.
Yeah, it's great to see these kinds of adjustments that can really help people.
Totally. So along with those bigger changes, there are a few smaller, but still important updates you should know about, like medical savings accounts, or MSAs, and health plans. These are getting some changes for 2025.
Right. If you have self-only coverage through an MSA, the annual deductible now starts at $2,850, and the highest it can be is $4,300. The most you'll pay out of pocket for self-only coverage also goes up to $5,700. And for families, the deductible is between $5,700 and $8,550, with a max out-of-pocket of $10,500.
Okay. Again, not huge changes, but good to keep in mind. As you think about healthcare costs, with healthcare always seeming to get more expensive.
Yeah, exactly. It's a good time to look at your health insurance plan and make sure it still works for you and your budget. You might even find a plan that saves you money.
Good point. And for anyone living and working abroad, good news. The foreign earned income exclusion is going up a bit to $130,000. This is so you don't get taxed twice on the same income.
Right, which could really matter, especially if you live somewhere with high taxes. Yeah. Now, if you're thinking about estate planning, or maybe giving some gifts, the exclusion for estates is going up to $13,990,000. And for gifts, it's going up to $19,000. So if you've been thinking about updating your estate plan, now might be a good time.
Yeah, these adjustments are all about keeping up with inflation and making sure estate and gift taxes are fair. It's definitely something to consider as you plan for the future.
Okay. Before we get too excited about all these changes, let's talk about what's staying the same.
Okay. So personal exemptions are still at zero. That's been the case since the 2017 Tax Cuts and Jobs Act. Itemized deductions are still unlimited, like they've been since 2018, and the lifetime learning credit limits are also the same. So some things are changing, but some things are staying put.
Yeah, it's not a total makeover, but there are enough changes to make it worth taking a look at your taxes.
Absolutely. It's important to remember, even small changes can add up and affect how much you owe in taxes. It's a good idea to check your deductions and credits and your estate planning to see if you need to make any adjustments.
So with all these changes, what does it all mean for our listeners?
Well, that's the big question, isn't it? You see, tax laws are always changing. What works this year might not work next year. That's why it's so important to stay up to date. If you understand the changes and plan ahead, you can make better financial decisions and maybe even pay less in taxes.
That's so true. And speaking of staying informed, there's one more thing. Remember those tax cuts from a few years ago? Well, some of them are going away after 2025.
Right, so the question is, will Congress extend them or will they just let them expire?
Yeah, and that's where things could get interesting. Because if those tax cuts do go away after 2025, we could be looking at what some people call a tax cliff. And that's not a good thing.
No, not at all. That could really change how much everyone owes in taxes. Some people might have to pay a lot more than they used to.
Exactly, and that's why. We wanted to make sure you knew about this potential tax cliff, something to keep in mind as you make financial plans. In the next few years,
Yeah, for sure. It's a good reminder that planning for taxes isn't just something you do once a year. It's something you have to think about all the time and be ready to change your plans as the tax laws change.
I agree, and as we learn more about what's going to happen with those tax cuts and what Congress decides to do, we'll definitely talk about it in a future deep dive. Because, like they say, knowledge is power, especially when it comes to taxes.
Definitely. If you stay informed and understand what these tax changes could mean for you, you can make smart decisions and maybe even pay less in taxes.
So there you have it. We've gone through all the IRS's 2025 tax adjustments, and we even talked about that possible tax cliff. It might not have been the most exciting topic, but hopefully you learned some useful things today. Just remember, even small changes in the tax code can have a big impact on your money. So stay curious, stay informed, and most importantly, stay ahead of the game when it comes to your taxes. Until next time.
Happy filing.